time to spotlight the Schwab Trading Activity Index from April. We'll find out what people are buying and selling. Joining me now to explain, James Kostulias is with us, Head of Trading Services at Charles Schwab. Good morning to you, James. We saw a lot of action in this. What stood out in the last months? This is proprietary data of over 35 million accounts. So what stood out to you?
Yeah, good morning, Nicole. I think the de-risking behavior stood out to me the most, if I'm being honest. I think people could talk about the pullback, 5.5% month over month in the index, but clients were still net buyers, right? And again, that's not sentiment, that's actual action, that's portfolio analysis and actual trading. And so I think there was some risk-off behavior as evidenced by the client base, but still net buyers. So maybe a little bit driven by some of the uncertainty that crept into the market with hot CPI print as an example. Obviously, some uncertainty still, tensions in the Middle East and the election. So I think most I saw was sort of the de-risking from some of the retail investors.
Yeah, so clients are still buying shares but not levering up is something that I pulled out from what you wrote. And so they're still in the game. And when they're selling some shares, it doesn't mean that they're totally selling off everything. They may be taking some profits, paring back some of the positions. We went from the level of the 51.65 to 48.87. So they did have that investment exposure decrease, and that dipped for the first time in a few months. When we talk about what people were buying, some great names and a lot of names that are in tech and fast growing names, right?
Yeah, look, the AI interest is certainly real and certainly did not go away with what we saw clients trading, right? And it's not a surprise you see a lot of the hot names with your AMDs and your NVDAs. And then on the sell side, interesting, finance, certainly, energies and utilities. I think the sort of risk off trade relative to the oil companies with Oxy and Exxon was also interesting. Obviously could be related to some of what we saw in the Middle East, but certainly there was also some negativity around Disney, obviously working through their sort of board drama as an example. And, people talk about a spike in the VIX, but anytime I'm looking at the VIX in the 15-ish level, yeah, it's a bit of a percentage spike going from 13 to 15, but we're still obviously at quite low levels historically.
Yeah, understood. And so some of the names that you mentioned that they sold off there, Disney, PayPal, Exxon, Devon, and Oxy. So those are the takeaways. Some inflows into fixed income, right? That's interesting, too. That shows the mindset.
Yeah, I think, again, probably consistent with that risk off, right? We're not taking money totally out of the market, but maybe we're trimming back some of our profits and seeking a little bit more safe havens. So I think that's the ultimate sort of lesson I would pull away from this STAX report would be, people might want to jump to we're turning into sellers. I don't think that's not the case at all based on what we see with the numbers, but more of a risk off sort of April. And then obviously with what we're seeing in early May here, not the usual signs of the sell in May and go away, at least in the first week or so of the month where we've had a lot of great market activity.
Yeah, and look, I know you would clock in some great gains on the S&P and NASDAQ if you were to do that this year, but if you look historically, if you sell in May and go away, it doesn't really work. And so you want to be, invested fully. And so you might miss some of the greatest days of the year. I'll just leave this. I want to get to the integration of what we've seen with TD Ameritrade and Charles Schwab. But just a final thought. I know you're watching the S&P 500 closely, some of the beat rates on earnings, for example, and anything else you might want to add in. We saw the VIX, for example, in this one, about 15, and today back to that 13 level. Final thoughts on this part of this?
No, I think that's a great point relative to earnings. I think what we're seeing is showing that strength and resilience in the economy and backs up sort of the notion that our clients aren't completely pulling back, but rather paring their portfolios. So I think that's a great example of where, historically there's been the question of how smart the retail money is, but based on everything we saw in April and we're starting to see in May, seems like the retail money's being quite smart right now.
Yeah. Let's get to the integration of what we've seen. I feel like it's been a long time. It was done very carefully so that clients from TD Ameritrade could move over to Schwab. The Schwab clients would also feel that they had everything they needed, and even the integration of just putting the platforms together. We're nearing the end of this, aren't we, James?
We are, Nicole. I mean, a 4.5-year journey is quite a long time, and we've spent over right at $1.5 billion to ensure we did this right. Both the conversion for clients and the experience that they would have when they got to Schwab. And so we've moved a little over 15 million accounts. We've moved over 1.6 trillion in assets, and that's sort of 90% of the clients at this point. And so we're gearing up for our final transition this weekend, where we'll move the final about 1.8 million accounts and 330 million in assets. And so it has been a long time, but that's because we've been really focusing on giving the best possible experiences for our clients and in every transition along the way, and absolutely committed to doing that here with the final one.
I'm sure at the end of 2019, when people started to hear about this, they said, what, my TD Ameritrade account is going to go to Schwab? And there's probably that moment where you have some anxiety, but you did this in phases very carefully throughout this time. This was an all-stock deal, $26 billion. It came at a 17% premium, and as you noted, has really begun at the end of that year into 2020 and has been done slowly and surely. In the meantime, what was the sort of the backstory of why this would work? The strategy, because there's so much to offer, even more so now when you put them together. You have the Thinkorswim platform now that people are using, all the world-class trading experiences, investing, education. I mean, touch on any of these about how this now works.
Yeah, what a great question. The way it works is bringing the platinum standard of trading, right? Schwab Trading powered by Ameritrade is made up of the Thinkorswim platform at the epicenter. And we listen to clients all the time. And one of the things I heard the loudest and the clearest was, please don't screw anything up with my Thinkorswim platform. A lot of our clients are using the platform to watch us right now on the network. And so a quick confirmation, the Thinkorswim platform and ecosystem, your fantastic service, your ability to watch the network and access all of our education, all of that will be completely available, is completely available at Schwab today, and will be available for the converting clients here starting on Monday. And so the real excitement then is once we're finished with the integration now, how do we offer the best possible product array, the best possible service array, the best platforms to our combined client base, and bringing the TD Ameritrade Platinum standard of trading to the Schwab client base, and then also availing Schwab products and services to the converted Ameritrade clients, we think is an absolute home run. And we've seen it in the data, where once clients get over to Schwab, there's obviously a little bit of dip in satisfaction and engagement as they learn about new platforms, and that's to be expected. But we continue to see fantastic quarter over quarter, month over month increases in their engagement, their satisfaction, and their usage of Schwab products, which tells us there's a little bit of a learning curve, but once you get over here, it's a truly great experience.
Yeah, and so as you noted, some of the most complex trading accounts will be moved over this weekend on this Mother's Day weekend. But in the meantime, listening to the customers, understanding from both the TD Ameritrade and Schwab customers, and putting the best features and functions together and making them available. So I would say, you know, with so many branches, and I look at it and I see 24/7 for people that they can chat and ask questions, and it's just the availability and the experience and the legacy that's so highly respected. But I think the seriousness in which this was taken to so carefully execute this, because I've been here, right? I came on board and it just sort of took off shortly after I arrived. And so I've watched it with my own eyes. And I too have said, don't screw up my Thinkorswim. And I'm just, the anchor here. But, the final thought here is this is it, 24/7, so many branches. James?
Thank you so much, Nicole. Yeah, I would just add, we really have been listening for your client feedback throughout the integration. And we've introduced not only the Thinkorswim ecosystem, but multiple enhancements to Schwab.com and Schwab Mobile to deliver the best of both Ameritrade and Schwab. And we were committed to that. And we feel once our clients convert and getting a chance to experience the new Schwab, they're really going to love it. And we're super excited about that.
Yeah, almost there, James. All right, good luck this weekend. I'm sure we'll go swimmingly, smoothly. Thank you for the time and the explanation of how this has gone over the last several years since 2019. James Kostulias, thank you so much, Head of Trading Services, and we appreciate your time. Charles Schwab.